Bitcoin's flash crash of the last 24 hours sold off $5,500. It dropped 7% from top to bottom. Liquidations were nearly $500 million across the crypto space. So is this the time that we should be freaking out? I'm here to tell you that I think crypto's at a turning point, but if you tuned into yesterday's video, you have a much better idea of the overall macro landscape because of course, you've found your home of macro cycle analysis, covering Bitcoin, cryptos, the stock markets, and of course the real estate cycle. We take a holistic view of the financial markets to help explain what's going on in the markets to understand what might come next. Hit that like and of course subscribe if you haven't already. You guys are doing fantastically well. You've loved yesterday's video. That went absolutely ballistic. We're going to continue to follow up with that one and I'll leave a link to it at the end of this video in case you missed it. But we got to update what's going on today. Now we have a massive update to get through in today's video, but I wanted to remind you that our Ultimate Trader Accelerator is almost ready to launch. A link in the top of the video description will get you access to our free crypto and economic report. You'll get this screen here, drop your name and email address, and you'll be notified when the Ultimate Trader Accelerator goes live. Now, it is absolutely free, provided you use the links in the video description here for Bybit and BitGet. They are channel sponsors, but that is a free crypto trading education that's coming out very, very soon. So check the links there for SwiftX, Bybit, and BitGet. Let's kick it off with cold, hard facts about the markets, looking at the charts and also the returns on the markets now and into the future, just using some of the predictive models here. Now, this particular post is looking at the German DAX, the Euro Top 50, and the S&P. Now, we want to look at the overall market here to see what the health is like out there, to see what's going on for Bitcoin and cryptos. I know a lot of us think that Bitcoin's going to have its own mind of its own because basically ETFs are here and nothing else can go wrong. But really, that is the mindset of a gambler and an amateur. Everything is interconnected out there. If cycles are going up, most things are going to go up with it. If cycles are going down, most things are going to go down with it. And in particular, even if the stock markets are heading sideways, sometimes even Bitcoin and cryptos can see significant losses like they have done over the course of history. We've seen the S&P 500 in 2018 basically go sideways. And for 2018, well, Bitcoin lost about 80%. Cryptos lost 99% of their values. So it's vitally important that we understand what's going on out there in the traditional markets to see whether we're still in tune, we're still trading with the trend, the macro trend. And in this case, we still see the macro trend as being up. This looks at the German DAX being 50% off its low. Historically, it keeps going higher. That's the most important there. So the 2 and 3 months later for the S&P 500 was up every single time. So basically, Germany's up, S&P 500 is up. Is there some correlation there? This is saying that there is. We've looked at plenty of other pieces of data to suggest why these markets are continuing up at this stage of the cycle, as it's the final leg into that peak, which we're expecting in the next couple of years. So the overall traditional markets, the stock markets are still looking relatively healthy, even in the face of these billionaires selling out their stocks. The markets haven't responded negatively to that whatsoever. And as I've said, even if there is a correction, we've got plenty of room to the downside to form a healthy correction, because essentially all of these corrections on the way up have basically been about 2.5%. And so only naturally, eventually you'll see some sort of 4, 5, 6, 7, 8% correction. That leads us over to the corrections for cryptocurrencies at the moment. 24 hours wreckage has been 460 million, nearly $500 million there. Now we've seen the 4th highest liquidations of longs. Remember, we take a look at this to see if we're getting a flush out of the leverage traders. Essentially, it's nice and healthy to see a flush out of those traders. Unfortunately for some, flushing out the leverage is part of forming a solid base in order to continue with the trend. And we've seen the 4th highest day of liquidations here. So what else have we seen? We've seen the market sentiment reach fresh highs again. Yesterday got us out to 88 on the fear and greed index, second highest to the 5th of March, which was at 90 before we got that flush out to the downside, dropping us back down to 75. So a pretty swift move from 90 down to 75. That also flushes out some of the market sentiment. In this case, some of the greed. We need to see that flush out for the market to stabilize and continue higher. Now, it can remain in the extreme greed, and greed for a considerable amount of time, as we've covered before, just looking at the previous cycle. So going back to 2020 and 2021, as Bitcoin ran into its peak in April, that was the first peak before we had the all-time high and then the collapse. You can see that it did remain in the extreme greed for quite a period of time. Now, there was this particular section here. This is January of 2021. Now, there was something going on around that period, but as you can see, the market put in a higher low and continued up. And as it continued up, we got back into the greed. Come another flush out through here in late February, got us back down into that fearful zone. So you can see this orange in the background is the fear. And then as we went up into the top, you can see the market sentiment start to roll over. You had lower highs forming on the market sentiment, which was showing that there wasn't as much excitement about these higher prices. And that's where we start to ring the alarm bells for the market sentiment, especially that May period here. This was a time when most were calling for $80,000 Bitcoin. It was barely hanging on to 58, trying to climb to 60. And specifically that time, I bring it up as an example because this is going to be, well, it's going to play a key role for when the market does eventually come down. I'm not talking about it coming down now, but when it does, you may see something very, very similar to this, where the masses are screaming for higher prices, that it has to do it because of whatever narrative, and in this case, probably some sort of ETF narrative or halving narrative combined with ETF narrative, because there's not enough out there. We'll get into that in a moment. But what was going on there is that the price had to go up because everyone was here and everyone was buying. It didn't reach a key level, which was this bar on the 18th. That was the very specific area that we were watching, talking about it on many other channels at the time. And the signal there was that you're getting a drop in the sentiment reading, but extreme euphoria happening across YouTube and Twitter and the public space. There was a lot going on that felt like this market had to go up higher and that the party was only just starting. But as we continue to cover from the price data here on the chart, lower highs formed also for the market sentiment here. So the extreme greed fell out of the market into greed, which then also fell out into fear, had a recovery bounce here. So basically like a complacency bounce into that May top. And then we rolled over into that May bottom. This was the time that we had the 20,000 live on YouTube, and it was just an absolute panic time in the markets. Then we had the quiet period and the markets continued on from that point. This is all going to come in handy as I talk about the crypto tipping point that we are getting very close to. And I'm not talking about it in the sense that the market has to collapse and it's over and that's it and it's left translated cycle, game done, come back in 3 years. Nothing like that whatsoever. But it's important to keep that in mind with how long some of these periods may take, not everyone, but some of them may take in order to reaccumulate after such a big move, an exciting move to the upside. Again, not saying this move is over, but we need to pay particular attention to that particular time in history. So where we currently sit at the moment, we're at 72K. We had that bit of a flush out here, and you can start to see how the volatility is creeping back into the market. You see these days down where we had significant moves. It starts to swing the fear and greed index, but things can still go higher. That was January here. Look at the swing on the fear and greed. The extreme greed came back and then the prices came back. But this is the first early warning signs that we're probably getting ready to put in some sort of top. Even though that was not the top, you can see the prices came back down into that area. So that's going to lead me on to the ETFs, just having a quick look at what's coming in. Some of the biggest days, if not the biggest day we've seen in ETF history, was on the 12th of March, 13,700, and the previous biggest day was 13,600. So let's have a look at that. Now, you got the 12th of March. Maybe you're a little smarter than me when it comes to ETFs, but if we had the highest ever day of inflows, why did the market close lower and then the next day closed only slightly higher, then to follow the following day, which was yesterday, to then flush out more of these longs down here and close lower? Now, I'm not saying this is the top, not at all, but I think that's kind of interesting to note that the highest ever ETF day coincided with a red day, not much of a movement the following day, so it's basically below the average at this point, and then the following day again was a big red day, higher, lower, big red day there. So we're trying to balance two different things here. The macro is still saying we've got time. there's more happening to the upside. The short-term stuff, the signal is still up. We still have an uptrend, but some of these indicators are giving slight short-term warnings. Now, I'm not getting entirely worried, but it's not the same sort of market that it was back in September of 2023 or back in March of 2023 when we were getting ready for the nice big pump up. It's not the same thing anymore. The markets have done hundreds of a percent move. And so we have to anticipate that eventually there will be something. Yesterday's video went into massive detail of what I think might happen next. So if you haven't seen it, link will be at the end of this video. Plus I've got an even better video for you from Michael as well, which I'll leave a link to in the video description down here. So let's carry on with what's going on with ETH now that the upgrade is in, because I want to look at these tipping points for cryptocurrencies. I don't think the game is over, but there's some interesting stuff that's unfolding. Now, for Ethereum, the problem was the fees, right? So all of these fees, it's no good. You don't use Ethereum, it's absolute garbage. The Dencun upgrade has launched, reducing the L2 gas fees, but not Ethereum's gas fees. Unfortunately, that may still take another couple of years. Nonetheless, you can see the fees here have dropped significantly, with the winners being Base and Optimism have done very, very well. We can look at some of the other updates here. I've got it right there. You can see that we've got some pretty good readings here for Arbitrum at about 10 cents, Starknet at 3 cents, and 1 cent for Base, and OP underneath 1 cent. Ethereum is very much still deflationary here. You can see that there was 44,000 burned, 17,000 issued. So it's dropping by 1.1% per year. If it was still proof of work, you'd have an extra 75,000 ETH compared to where we are now, which would all need to be absorbed by the market at around $3,900 US. So about 4,000 USD at 75,000 ETH, about 300 million. Add in the burn to that, then of course it's going to be less, but nonetheless, it's still a big number that would have needed to be absorbed, which is potentially showing up here on the ETH chart with a nice big skyrocketing move up past the monthly swing top and getting very close to the weekly swing top, which leads me to the pivot points on these charts. Now I've got the total cryptocurrency market cap, excluding ETH, Bitcoin, and stablecoins. This is an exclusive indicator with the TIA indicators. You can find a link to this in the top of the video description. 7-day free trial, emails daily to help you use each of these different indicators. So go and check that out now. Looking at this in terms of the tipping point, we can see the monthly swing top here. What has happened in the past with the total cryptocurrency market cap? Once it gets past this monthly swing top, it's basically gone on a big run from there. Now, we've gone on a very significant run. I've seen some comments from people saying my cryptos haven't pumped. I mean, there's been quite a significant pump so far, but there's still the possibility of an even bigger pump to come. Now, layering this on top of what I talked about yesterday, we have to understand where we are in the timing. So I'm not talking about today, tomorrow, next week. I think it's important to keep that in mind. But if we see this particular chart start to break above the previous monthly swing top and close above it, that's a very strong sign, not a guarantee, but a very strong sign that we might start to see these cryptos absolutely go bananas. So that would be the altcoin season that most have been waiting for. I think when the retail space starts to come about, that's probably where you'll start to feel it. Probably past this level here, which is roughly 660 billion up to 700 billion, and then obviously the all-time high. When things break all-time highs, everyone goes ballistic. That is going to be 1 trillion. So for some nice round numbers, look at 700 billion to $1 trillion on the total cryptocurrency market cap, excluding stablecoins, Bitcoin and ETH. And that's going to give you a signal as to this tipping point of when things would potentially get bananas. You can also see this signal down here with the volume really starting to pick up as we hit and so far past the 50% level. That is why the 50% level is so vitally important for your trading. The 50% level shows the strength and the weakness in the market. And if it is able to break through on strength, keep going, or at least come back and retest, then you've really got a strong market on your hands. You can see exactly what happened last time as well through the breaking of that monthly swing top. And in terms of the 50% level, well, it came out right at the top of that monthly swing top. So it's nice how these things line up using the swing chart and the 50% level. And as it started to break through, you can see even just a little bit higher here, tons and tons of volume come into the market. Now, it doesn't mean that there is long to go, but you can really see that energy come in, and basically everyone's a winner, everyone's a genius. Doesn't matter what you put your money into, you're going to win. But, huge but, do you want to make massive money or do you want to make pennies? And the worst thing about being in this market and making pennies is that you've missed a huge opportunity. This is one thing that I want to give you, and it does offend a lot of people who hold these particular types of cryptos because they don't see it. It's just the facts from the charts. It's just looking at the data on the charts. And if you know what I'm talking about, hopefully you don't hold this particular type of cryptocurrency. Now I'll show you the weak cryptocurrencies next, because when this tipping point happens, you want to be holding the stuff that is going to go bananas. Just do not hold the weak stuff. It will go up against USD value. I'm not saying it won't go up against USD value, but it probably won't pump as hard as a lot of other cryptocurrencies which are not showing this sign. I've talked it up a lot because this is so vitally important. You get this opportunity once every few years. If you screw it up now, you'll have to wait again to get to that next point. And what stops people from doing it, and I'm dragging this out for a very specific purpose, what stops people is their addiction to being part of some sort of community, looking at fundamentals, looking at this other BS that keeps them poor. Choose rich. Now, if you choose rich, choose to subscribe to the free Crypto and Economic Report. You'll also be on the list to get into the Ultimate Traders Accelerator when that is released, using these links down below. All right, this is a weak cryptocurrency. You ready for it? That is the piece of shit that you do not want to be in when the market goes bananas. If you are stuck in something like this, regardless of what that says in the top corner, you are not going to make bank. That's just pure hard facts from the charts. There could be that very small opportunity, that very small possibility that this does do it. It's not a guarantee that you won't make anything. It's not a guarantee that it has to collapse, even though I've talked about it like that, and it's just not going to make the same amount of money, but you're really putting the probabilities off your side for actually making any sort of significant gains. The problem here is that it is very weak against Bitcoin right now, and it is on the verge of getting down into the danger zone. So as I've talked about many times, there are no guarantees in this market, but you just want to put the probabilities in your favor. And getting into cryptos that look like this against Bitcoin value at this stage in the cycle, when we're so very close to hitting a tipping point where things go bananas, or typically go bananas, and you are stuck in this sort of thing, you really don't like money. You are like Peter Schiff, and you basically just want to keep holding the garbage that goes down against everything else in the assets, all the other assets that are out there. This, of course, is the crypto in the top corner here. Now, there are plenty of them. This is just one I like to pick on because, I don't know, it triggers a lot of people. A lot of people are still in this thing, but I want to show you a strong one as well. In terms of the USD chart, let's have a look at that, because this is what most people look at, and they're thinking, well, my crypto's going up. This is great. What are you talking about? It pumped the other day when you talked about it going down. Sure, it did, but then also faded for the next few days after that. Meanwhile, other things are going off. Prime, what is this, 15%? Jupe went up 10%. Solana's going up as well. You know, if you didn't get into Solana, check out some of the other ones that are in their ecosystem. But here it is, XRP, 30 cents. It's up 60 to 60 cents. It's done 100% in this entire move from the lows of June 2022, which is why it's even doing worse than Bitcoin. The biggest market cap in cryptocurrency is doing better than this thing. That's the point here. Now, you're exposing yourself to a lot of risk because it is a higher risk asset than something like the blue chip Bitcoin, and it's not even performing as well. That's not even my opinion. That's just what's going on here in the charts. So there we go, Jupe's taken off again. So to put this one to bed for now, this is not something that looks very strong, even though on the USD chart, you can still see it going up. I've posted about it before on Twitter, X, that it has not even outperformed gold. Can you believe that? That is a friggin' joke. That is an absolute joke. All right, what is actually good? I'm just going to keep to the big ones. There is a lot that is good, of course. You let me know in the comment section what you like. I'll put a pinned comment up there. What's your favorite altcoin? I'll show you Solana. You know, the third or fourth top crypto here behind Bitcoin, Ethereum, and of course the stable coins in terms of market cap. But look at the tipping points. You've got the 50% level, it had a small rejection here, a little bit lower down, just here at about 130-ish or 125. And then it broke through the 50% on increased volume compared to where it was and compared to all this area here. So that's a reasonably good sign. And then we've got the weekly swing top up here. So you can see from ETH, very similar. You've got your monthly swing top and the weekly. If I throw it onto monthly, you'll see exactly what I mean. That yellow line in the background, the swing indicator, shows you those clear areas that the market likes for support and resistance. And if it's able to squeeze through those significantly and convincingly, that's a really, really good sign. So on the monthly, there it is. On the weekly, around that 4,200 level is the next one to beat. I'm not saying this is going to happen today, tomorrow, next week. It still needs to get through that. And I suspect once ETH does it and once Solana does it, that is going to tip the total cryptocurrency market cap over this point here. Of course, this one excludes ETH, but Solana is going to play a very big part in getting the total market cap over that particular point, which then turns it into a pretty significant tipping point just based on previous history here. We've got some good volume. And when that rings, when that bell rings, you don't want to be in the stuff that is going down. XRP against BTC, essentially on the brink of breaking to levels below 2017. Could you imagine buying something before the bull market took off in 2017 and it's basically doing the same gains as what Bitcoin has done? It blows my mind. Solana BTC, on the other hand, for now, these things can change. In 2 or 3 years' time from this, maybe Solana has that same sort of chart. It fails here and just continues down from that point. Who knows? We honestly don't know. So from here, Solana is attempting to break this 50% level, and it's looking much better than something like XRP. You want to have charts that are looking more like this than what we just looked at with XRP. You can see a very, very clear difference there. So stay on the right side of the market. If they break down, there's no guarantees, but if they break down from these levels, that's going to be one of your signals to say, maybe this isn't going to be the coin that gets me to that $1 million status, that 20, 50x sort of status and hit my dream goals. And that's where your job comes in to go through all of your BTC charts and your altcoin charts. I've got heaps more coming up on the channel. Subscribe so that you can stay up to date with this as we watch the tipping point for crypto, as we watch Bitcoin's failed 4-year cycle warning, which I'll leave a link to at the end of this video. And don't forget to go and check out Michael's channel. This video here was an absolute stunner. It gets you so fired up and so bullish. It's your Elliott wave look at the market, because I think a lot of people are going to miss out on this particular next stage of the market with the possibility of a left translated cycle, which may turn out to be relatively good. That is in the link down below, as is this particular video. You've got lots of content to go and watch there. Thanks once again. See you at the next video. Till then, take care and peace out.